Gang, as you know, real estate investing is a team sport. And to execute this 100-year real estate investment strategy, we needed an expert. We needed an expert with a track record, over 20 years of experience. We needed values alignment. And we found that all in our guest. Teresa, welcome, and thank you for coming out to the house today.
Of course. Thank you for having me.
Now, tell us about your mindset and how it applies to this.
Well, let's talk about the 100-year mindset, which is really how we connected, right? The 100-year mindset to me is about making decisions today that inform your future. And it's not just investing, it's not just finance, it's not just parenting or relationships, it's every area of your life. Why? Because if you're thinking long term, you're going to make decisions, right, that are good for you short term and long term. We live in a society that's all about now. It's all about making a decision that's going to benefit me right now. I mean, we get frustrated when Amazon Prime says they can't deliver in 24, 48 hours, right? We want things now. Well, really, to live a really good life, we need to start thinking and making decisions based on how is this going to affect my today, my tomorrow, 10, 20, 50, 100 years from now. So the 100-year mindset, and okay, if you're in your 60s, 70s, you probably don't have 100 years to live, right?
You may have kids.
But you have kids, right? And the decisions you make can impact your legacy. So thinking 100 years is important, right? But if you're in your 30s and 40s, you might live 100 years and more. So thinking about every area of your life and making decisions with that long-term perspective, right, is going to make such a difference.
Well, we got 9 kids in the house right now, Gino. So I think there's some values alignment.
We've
there.
got a lot to pass on to those kids, don't
That's
we?
right.
Talk about the values of the 100-year real estate investor.
So the values, there's so many great values that you've talked about, right? And it was about growth and learning, and it's about integrity, and it's about making decisions based on integrity and based on values. It's just not shooting from the hip. My values include simplicity, probability, and leverage. You talked about simplicity. My simplicity is a little bit different. Taking out the noise and taking out all the stuff that's not necessary when it comes to decision making, systems, processes. You know, I tend to over complexify. If you know me, you know I'm kind of like that. So I have to work really, really hard at minimizing, right? Keeping things simple. But when things are simple, guess what? You get to have so much more enjoyment in life than just being in, you know, mirrored in the middle of all this crap that we just complicate our lives with. It's not necessary. And for real estate investors, when you really get at it, you can accomplish so much more with simplicity. I know you know real estate investors that have their hands in 100 different things. They are masters of none. They don't know what they're doing, right?
Yep.
They'll go invest in one strategy and then they might mess up and then they go in another and another and another. How do they ever master anything? How do they find simplicity in their processes and systems? They can't. Doesn't happen, right? But what you guys teach is keeping it simple and mastering processes so that you can win and you win long term.
So let me repeat those, Jake. It's simplicity, number 1, probability, number 2, and leverage, number 3.
Let's talk about probability, right? When you simplify and you look at making decisions based on what action steps are going to give me the highest probability of success, you're going to make different decisions instead of, like you were talking about, the shiny object syndrome, right? If you're chasing all these different strategies because, you know, let's face it, real estate investors, especially your community, they're smart people here, right? And smart people tend to get bored. But that boredom works against them because they're always chasing something shiny because they want to learn more, or they're curious, or something looks interesting. Cut that out. It is decreasing your probability of having success. The more simple, the more you master systems, processes, the more you master your strategy, the higher the probability that you will be successful.
Well, let's talk about the third one, leverage.
And that's what we're all about. We're all about that leverage. What if you can take $1, leverage that dollar, and create 2 assets with it? The dual asset strategy. It's trademarked, by the way. So, hey, how cool is that, right? And so we use that dual asset strategy to take that $1 and to create multiple assets with it.
Can you unpack that for us in a real world setting, what that looks like for a real estate investor? In real terms, the dual asset strategy, what is that?
All we're doing is talking about taking $1, putting it into a specially designed whole life policy, right? And once you've got equity in that policy, you can borrow out that equity and go buy another property or go invest in another property. It's that simple, right? Keeping it super simple. You're taking money, putting it into a policy, it's got equity, you're borrowing it out to go invest in another investment.
So here's the bottom line. Gino's been employing this strategy for years. Our third deal, we talked about the time that it takes, the long-term vision and the mindset. It took us 2 years to get into real estate, really. It took us another 2 years before we really started getting good. And then that 5th year before we really started making money. But you look at those lagging efforts. And that was our third deal. Gino used his whole life policy to get into that third deal. And that was the deal that really set us free.
And you have to adopt the 100-year real estate mindset. This
right.
is not going to happen overnight, right?
Yeah.
This is a long-term viable strategy for people who want to protect their families. You're getting a death benefit and you're getting living benefits from this.
Yeah.
You're getting dual benefits as well. So always focus on that. Don't focus on the short term. You need to really focus on the long term.
And I want to talk about that because, real estate investors are taught, leverage your money, leverage your money, leverage your money, right? And constant. And so they'll ask, well, what's the return on the policy? And, I may put in $100,000 and I'm not going to have access to $100,000. I'm losing that opportunity to go leverage that. No. That's such short-term thinking. It's not necessarily about the return right now and the fact that they don't have 100% day one. It's thinking, shoot, you know what? I put let's say 100,000 in. Maybe I can access, let's say 75,000 out, right? It's just making up numbers. You know what? That 75,000 you can take, create another asset, and over here, that 75,000 is still working for you as you hadn't pulled it out. So you've got uninterrupted compounding, or how some of my clients like to say, they're double dipping.
Yeah.
And over time, guess what? You are winning on both ends.
I was taught to put money in a 401k plan. And if I had done that, guess what? I wouldn't be sitting here because I wouldn't have access, because I wouldn't be able to pull that money out. I'd be penalized and I'd be told by all the financial pundits, you can't do that. That's financial suicide. So I had that money sit in that policy, and that opportunity cost, once again, was a game changer for me.
And if you want that money out of the 401k, they're going to cut you down, right?
They are, exactly.
So here's the thing. There's people that fix and flip. There's people that invest in commercial. There's all these different types of real estate investors. I don't see any reason why this shouldn't be open to all real estate investors, really.
They are, absolutely. In my real estate demographics, from a client perspective, they're doing everything.
Yeah.
Now, hopefully, they're not individually doing everything. I try to coach them out of thinking that way.
Stay in your lane, right?
Stay in your lane,
Right.
master something, right? But I've got clients that do commercial. They invest in syndicates. They do multifamily. They do fix and flips. They do hard money lending. I've got a client who retired in his early 50s with millions of dollars, and he was flipping with his wife because his wife is a decorator and she was having a lot of fun. He discovered hard money lending. Oh my goodness. He flips over his money. He turns, actually, I call it churning his money in his policy, just like banks do. Have you guys ever...
Those guys are like payday lending, too. They get like 12, 15%.
Oh,
Yeah.
it is.
Yeah.
It is absolutely like that.
crazy.
Have you ever wondered why banks own the most expensive real estate in every single community? Every single community.
I know our bank's right at the intersection, right? They're looking pretty nice right now, so tell us.
And beautiful buildings,
Yeah.
because they understand how finance works. What do they do with our savings? And as real estate investors, one of the mistakes that real estate investors make, which you guys know this, they have so little in reserves because they've been taught you've got dollars, you've got to leverage
to
every
work.
single dollar,
Yes.
right? And I teach our clients, hey, no, you've got to keep money in reserves.
My question for you, though, is how quickly could someone access the cash? Because we're going out there, we identify an opportunity, right? We see a problem, and we're looking to take advantage of that. We want to invest in the deal. We have the policy. How quickly can we access those funds to create a dual asset?
So after the policy is set up, you've
Yeah.
got equity within 3 to 5 business days.
Sounds pretty
Are
good.
you charging interest on the loan?
Of course you are. Absolutely. And you know what? You're still earning interest. And, well, it's called dividends, increase in cash value on the money that you've borrowed. That's where the uninterrupted compounding comes in. And for many of our clients, the way they take out their loans and the way they pay back their loans, the interest cost is either neutral or they're making more money in the growth than they are in paying the interest. It is the most efficient loan out there. And it's not compounded on the interest. It's simple interest that's being charged.
Jake, let me mention this too. This is really important. What I love about this is the control. You are controlling
You're the bank.
As an investor, you want to control the flow of funds. So you're able to control the flow of funds. You're recapturing it. You are controlling your life with this strategy.
You become your own source of financing. And over time, you've built up so much equity in your policies, you don't have to go to your banker. Sorry, banker, right? The guys
We
you
love
work
him,
with.
but hey, he's still going to be there.
And as your deals get bigger and bigger, maybe you continue to work
Use
with
it for
him,
the down
right?
payment.
Exactly.
He can do the principal and use this for the down payment. That's the strategy that I think it will work really well.
Exactly.
So I'm going through a policy with you right now, and this is how I'm envisioning it. So we're doing the policy. Gino and I are buying an $8 million deal right now. So I'm going to take the money out, and then I'm going to set it to pay back over a 10-year amortization, a 10-year term, and then set it, forget it. Once it's done, the cash flow from the $8 million deal will cover that note. After 10 years, I'm left with a piece of real estate that's cash flowing fully to myself at this point, and a policy in hand. It's as simple as that, right?
It's as simple as that. And you've got millions of dollars back in equity. And in the meantime, as you're paying back that loan, you're building your equity back up. Guess what? You get to use that equity for another deal.
Yeah.
So you just keep churning that money.
Recycling the money.
Recycling the money.
I love it.
Yeah.
Love it.
We call it the velocitization of money.
Oh,
Jake
he's
likes
getting
that
fancy
word.
over here.
So what are the benefits on the whole life strategy?
Just the policy itself. You've got life insurance, death benefit, right? If you die prematurely, it goes to your estate, it goes to your beneficiaries, it could go to your partners, it can go to pay off real estate debt, right? You guys are in a partnership, you own a bunch of properties, you've got debt. If something were to happen to one of you, what a gift that life insurance policy can pay off that note. So you don't have to be in business with Gino's family anymore if Gino was to pass away, and vice versa. That money can be used to pay off, Gino's wife. Sorry, Gino, I'm not trying to kill you off here, but just
No, we want to keep the guy around for a
we
little
want
bit.
to keep him around, right? But isn't that a cool gift?
Yep.
Like amazing. Your wife would get a check, you just own the property right out, right? Let's say you get sick, you've got some major medical issues. You guys are in your 60s and 70s, you have some life insurance there, and you want access to money for long-term care, right? Lots of people worry about long-term care, and you can access the death benefit while you're living. How cool is that? Depending on the state that you're in, the state that you live in, there's asset protection. Real estate investors get into trouble. It's, a lot of litigation in real estate. For some states, right, the money that's in the life insurance is protected from creditors and litigation. How cool is that? So we have clients that will put equity, money, build up the equity in the policies, take those loans out. If they get into trouble, they've got a safe haven to stick cash in.
How do these policies grow? Are they linked to the market?
No, God, no, absolutely not.
Because I have zero money in the stock market, and that's I don't want to go there, right? Yeah.
Well, and some people are like you, and some people want money in the market, right? But if you've got money in the market, Wall Street, if you've got money in real estate, you've got a lot of risk, right? You have a ton of risk. Do you know that the Federal Reserve, we're going back to the banking system, dictates to its member banks where they could put their safest capital. It's called Tier 1 capital. And do you know that banks own more of this life insurance for their Tier 1 capital than any other institution? It's called BOLI, or bank-owned life insurance. And corporate America does too, and that's called corporate-owned life insurance. So if it's good enough for them, why aren't they talking about it? Have you ever heard a bank tell you, hey, put your safe money, put your reserves in whole life insurance?
No, they offer me 0.5% on my money.
Of course, right? Absolutely. And if you take it out, then what? You're earning zero.
Yeah.
Can we discuss the design of these policies?
Absolutely. So actually, we talked about the market, right? And so you want cash available, or reserves, that is not linked to the market. That's not linked
I don't want that roller coaster.
Right. You don't want that roller coaster. What do Warren Buffett and Bill Gates and Apple and Amazon have in common?
A lot of money.
They have a lot of money, and they have a ton of money sitting in cash. They've got almost $1 trillion sitting in cash. What do they know that we don't know? Do you ever hear anybody in the marketplace of financial information say, keep money in reserve, keep some cash in reserve, keep it in a safe place? Do you guys ever hear that?
Yield is hard to find right now, right?
It's not about yield all the time, though.
Yes.
Right? It's not always about yield. It's about having a safe place to park your money, so no matter what happens, you've got options, you've got choices.
So Teresa, who is this strategy not for?
Well, I know this sounds somewhat self-serving, but I believe it's for every individual, family, and business owner, real estate investor, everybody.
So one of the things that really struck me, and Gino, you touched upon this, is that the 100-year real estate investor, this is not something you go in and just take off the shelf. This is a customized, tailored plan to meet a specific objective. Can you touch on that?
Absolutely. Every investor has a different objective. Every investor has different resources. And so we customize the strategy to the individual, right? You know, some of the investors have families, they've got kids, some have kids are out of college. I mean, everybody's a little bit different, right? And so we absolutely customize this to meet each client's objectives and resources.
So the value truly is in the design and the designer of the policy.
Absolutely. It is designed properly to give the investor cash up front, and it's got to be with the right companies. There are companies out there that are not the right companies for the designs that we use. There's some companies that don't offer uninterrupted compounding. Well, you know what? Uninterrupted compounding is probably number one on the thinking of our investors in terms of what they want, their number one benefit. If you're working with the wrong company and the wrong advisor that says that's not that important, run.
Ultimately, if you look at our family of companies, it's all about fulfillment. It's all about the customer experience, and that's where that values and alignment is coming into play. And it's the confidence in the team and the policy design that really allowed Gino and this partnership to happen here. So it's wonderful.
Yeah, we're going to make such an amazing impact in the community. It's really phenomenal. You know how many, maybe hundreds of millions, if not billions of dollars we're going to create within the community? It's fantastic. So excited.
Teresa, this is fantastic information. Where can folks go to find out more about this?
100yearrei.com.
The 100-year real estate investor, 100year, 100rei.com. Teresa, thank you so much. You brought tremendous value to our community. You brought tremendous value to me, and I can't wait to make this happen. I know it's going to be phenomenal for my legacy and my estate planning and my family in general. And Gino, thank you for turning me on to this. Thank you for pulling this together. As always, well done.
It took a little while to pull you there, but you got there, and that's the important
I'm getting over
thing.
the finish line.
And you know why? It's all about core values. We discussed core values previously. I challenge everyone out there, everyone that's listening to this, start with your core values. And once you have those core values, they're going to resonate with you, and you're going to start adopting that 100-year mindset, and things are going to completely change for you.
Thanks again, Teresa.
It's an honor.
Thanks,
Thank you.
Teresa.